All right, everybody, Bryce here, coming at you with another real quick crypto market update. And things have been hot in the crypto market. It's great to see pretty much every resistance being blown through like a hot knife through butter. Pretty much on Bitcoin, the only resistance left is that $69,000 all-time high price point. We have now smashed through every resistance. It's incredible to see not only Bitcoin, but all these altcoins. I mean, I've seen 100% pumps in a day on coins that are like $500 million market caps. This is like really like what we're looking at when we talk about altcoin season. We're in it. We are in it, and it's been a ton of fun to trade. Very vindicating as an investor in the altcoin world to have these sort of pumps. Man, it's as sweet as sugar, and I couldn't be more excited. And a lot of this is on the back of these really positive ETF flows. I talked about it in my last market update, but these ETFs have just taken in about $500 million a day in the past few days, and they haven't had a single day of net outflows in like the past 12 days, which is crazy. It's been historic. By every measure, this has been historic. My favorite stat, I think, of these ETFs is that out of 5,500 ETFs that have ever launched in America, and there's about 10,000 globally, but out of all these ETFs, never has a single ETF gotten more than $3 billion of net inflows and assets under management in the first 30 days of trading. But enter the Bitcoin ETFs by BlackRock, which is the IBIT ETF, and the Fidelity ETF, which is the FBTC. Both of these have gotten $3.5 and $4.5 billion in those first 30 days. So we blew through the records. And that's just showing you how much demand, organic demand there is for Bitcoin. And what's really interesting is there's this investor advisor. His name's Rick Edelman, billionaire, manages a bunch of money. Really, important figure in the financial space. So currently there's on net been about $10 billion of inflows into the ETFs. He says by the end of 2025, so in about 18 months, we should see $150 billion of net inflows. And he kind of backed this out because he was saying like a lot of these financial advisors right now who are independent, they control $8 trillion of wealth. $8 trillion of wealth that's in these independent IRAs, right? These registered investment advisory groups. $8 trillion. They do not currently have access to these Bitcoin ETFs. This is by their, sort of the bylaws and how they're incorporated and all that stuff. In order to offer ETFs to their clients, they need about 3 to sometimes 6 months of trading history and a track record, right? And build up in liquidity and volume for them to even start to offer this. So this is a whole nother universe of buyers that is going to be coming into the market pretty soon as we're on our second month of trading. So he was with Matt Hogan, who was also saying that, all of these advisors, they're having conversations with them at Bitwise and all the, Grayscale and BlackRock and Fidelity. They're all talking to these advisors and saying, hey, you buy our Bitcoin ETF. Here's why it's better. The fee is lower, X, Y, and Z. We're more transparent. Whatever the selling proposition is, they are hitting the street. Okay. And the street is hitting Bitcoin. Wall Street is coming in big, and we've just seen an incredible amount of inflows and excitement. So anyhow, that's enough on the Bitcoin ETF. I want to move over to the Federal Reserve because one of the Federal Reserve members, a guy with the last name of Waller actually just went public with his stance on stablecoins, and it shocked me. I mean, this shocked me. This was a vastly different tone than the Federal Reserve typically strikes when they reference stablecoins. Long story short, it was glowingly positive. And he said that the stable coins are actually benefiting the US dollar. Of course, we've known this for a long time because all of these stable coins all around the world are the US dollar, right? Sure, there's some Euro stable coins or there's some, Japanese yen stable coins or whatever. But nobody really wants to hold any of these other currencies except the dollar. The dollar is the best, strongest currency in the world. So of course, if you're anywhere in the world, that's the one you're going to want to hold. And so this Federal Reserve chairman, a member of the Fed, Waller went out and just gave a glowingly positive review, and he says, these stable coins are here to stay, and it's not a bad thing for the US dollar. So that was really, really exciting. And kind of the last thing I wanted to just highlight was the strength and the momentum, particularly in the altcoin market. I mentioned I've seen coins up 50% to 100% in literally the span of like 24 to 48 hours, which you don't see that in a bear market. You don't see that in just a dead cat bounce or a bear market rally. I've seen some people say, "Oh, this is gonna pilfer out. It's just a bear market rally." That's BS. Okay, this is the start of an incredible bull run. And these altcoins, I was looking at funding rates. Okay, so funding rates are the cost to go long, right, on these perpetual swaps. And I don't trade the perpetual swaps. These are offshore instruments. In fact, the folks in the States really don't have access to a lot of these. But I still track the funding rates, right? They're public metrics. Anybody could track them. And they tell you a lot about the market. It tells you when markets are overheated or when markets are cooling off. And right now, we just entered into a phase of these funding rates being a little exorbitantly high, meaning there's a lot of leverage starting to creep back into the ecosystem. Now, in December, when, again, we had just incredible amounts of price action to the upside, all of these altcoins, they sustained this level of funding rates. Again, the cost to go long, they were paying a premium to get long. Right? It's like a future in contango. So these markets were really blown out, but they stayed blown out for a month before we had that really nasty correction in the kind of the second week of January. So what we have now is a kind of a repercolation or a sort of buildup of that leverage in the altcoin market. So this is when prices start to move really quick to the upside. This is when the volatility starts to come. You see a lot of really anxious, eager buyers. So this is a great time to be a holder. I don't think the time to sell is anywhere near. Again, last time we saw this indicator, it sustained itself for over a month. So I think that we're going to have some incredible price action here for the next 4-6 weeks. Maybe we cool down a little bit right around the halving before, bam, picking right back up as all those registered investment advisors with their $8 trillion of wealth start to put 1%, 2%, 3% of their client assets in Bitcoin. That's going to trickle down to altcoins, baby. It's going to be a good time to be an investor. So I'm going to keep the watch as I always do. I'm always doing the research for you so that you don't have to. That's the best part of everything that we offer here. You guys just get to come along for the ride. Of course, you always got to make your own investment decisions. And this is never financial advice, but I hope that you guys enjoyed this, and I hope you guys are going to be along for the ride. All right, we'll see you guys soon. Also, real quick, if you don't already have access to a service where you could get, fundamental analysis, technical analysis, charts, all sorts of stuff showing you, where the market's headed, if you want something like that, but you don't already have it, I'm going to give you a trial. Okay, so for 2 weeks, all I ask in return is $1. $1 just to get a little buy-in. You give me $1, I'll give you 2 weeks of everything we have here at Crypt Nation. And come and see. We got a community of over 10,000 crypto traders and investors sharing their thoughts, sharing their opinions. I'm in the group, sharing all my stuff with my analysts. It's an incredibly enriching environment, and you're missing out if you're not in there. So come on in. We'll see you there.